This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on November 15th, 2018. Our time is 8:06 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Later in the podcast, we are going to talk about diamonds. It was an outstanding week for rare colored diamonds, in particular pink diamonds. The Argyle Pink Tender, record results, and the Pink Legacy Diamond went for $50 million. All the details coming up in the podcast. The numbers as we start today's podcast: US dollar. It has really popped up. It's at 97.19. Canadian dollar down 75.57. The euro at 113. The pound at 127. Gold at $1,213. Silver at $1,416. Gold-silver ratio almost back to 86. It's 85.75. Platinum $831. Palladium $1,112. WTI, and this is where oil has really taken a hit over the last month. It was down $21 a barrel on Tuesday. 56.42. Brent 66.65. Nat gas, it has been up very, very strong. 441. Bitcoin has pulled back. 5,366.40 in US dollars. In Canadian, 7,098.41. The Dow at 24,972, S&P 2701, NASDAQ 7,138, TSX 15,133. Harold, we're seeing a lot of pullbacks in many different markets. Is this just happening because we're due for a correction, or is there something bigger at play here? What do you think?
First of all, oil plummeting as much as it has, with Iran's oil off the market and Saudi Arabia coming out and saying that they're willing to cut production, that shocks me. Oil should be up, not down. Stock market, I understand, obviously very volatile at this point. A lot of things happening in Washington and in the U.S. at this point here. So, the volatility in that market, we haven't seen a pullback realistically in the market for 10 years now. So from 2008 till now, this market has basically gone straight up. After it's dropped down to 6,500, it's basically made a beeline up to 26,500, trading at 25,000 now. We'll have to see. Higher interest rates are certainly a problem, for the market at this point, as is the tariff problems with China, and obviously a looming multi-trillion-dollar debt as interest rates are going higher could definitely wreak havoc on the market. So that's concerning. A big drop in Bitcoin. Bitcoin dropped by almost $1,000 in one day. No real reason that they're coming out with it, but some of the cryptocurrencies really did get hurt badly. And the currency markets, the U.S. dollar is gaining strength, which is why gold pulled back. The British pound, because of the Brexit situation, is in trouble. The British pound should really fall substantially. I know it did fall a bit this week, but I think much bigger movements are coming on the British pound. The euro is not doing great. Right now, it's the U.S. dollar. U.S. dollar's at 97. Again, if they continue to raise interest rates and inflation is going to be an issue, we could see the U.S. dollar break over par and go back up to the 102, 103 level, which could literally bring gold down back into the 1100 level. So we're going to have to see what happens. A lot of this has to do with the U.S. dollar. Again, raising interest rates because of potential inflation. I think that's going to affect the markets moving forward.
Connect with Harold at rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast. In our newsletter this week, our chart of the week, what's behind the slump in the oil price? 85% say it's due to weakness. Brent crude lost $21 a barrel on Tuesday, and crude's collapse is sending shockwaves across global markets. Investors had gone to contemplating, we talked about it too, oil at $100 to now here we are around 56, 66 with Brent and WTI. So that has been a big change. Now, an update from some experts. Renowned energy trader Mark Fisher on Wednesday said the worst is over for the oil market following a 6-week rout. He actually believes that now would be a good time to dip your toe into the market. Brent crude is going back to $75 after an OPEC cut, that according to Goldman Sachs. And here in the Canadian oil patch, the Canadian oil sector is divided over whether to force a temporary cut to production, with some major producers pushing the controversial idea in a bid to ease supply glut and halt a steep plunge in prices. We had Donald Trump complaining about high oil prices, saying to the Middle East, start pumping, start getting it out there. And now we're seeing the price come down in a major way. It seems that people aren't happy either way. They want high prices, and yet some people want low prices. It's very confusing to many people.
Oh, yeah. Obviously, the consumer is happy with lower prices, but producers are very unhappy. And again, it's a little strange because Iran's oil is off the market now, which means that there's less oil, which is bullish for the market. Then on top of that, OPEC came out and said that they're going to cut production, which is extremely bullish for the market. So a $21 drop in oil in one day is concerning, but it's got to be very close to its bottom. And oil can be extremely volatile. I've traded oil, for 30 years. I've seen everything happen basically in the oil market. And I think that this market will rally again because, again, eventually shortages have to show up in the market. Again, normally it's buy the rumor, sell the fact. If the rumor was that OPEC is going to cut production and Iran's oil's off the market, that should have been enough to rally the market up to $80, $90. But obviously, something is undermining the market price at this point. And we'll have to see. It'll all come out in the near future, but we got to be very close to the bottom of oil at this point.
We promised that we would keep you up to date on the debt and deficit situation in the United States. The U.S. government posted a $100 billion deficit in October. The debt ceiling will be hitting $22 trillion very soon. I went to the debt clock for the United States this morning. It is at $21,740 billion. Getting very close to $22 trillion. The Fed did collect record taxes in October, and yet they still ran that $100 billion deficit. The debt and deficit situation, Harold, we keep an eye on it because eventually at some point, and as they continue to raise rates, as we've spoken about, much more money is going to be needed to put towards the debt because they're paying more on the interest. That is a recipe for disaster for the United States, especially if interest rates and inflation really start to pick up in a major way. It is a concern for the markets.
Higher interest rates, when your debt is the highest it's ever been, is a recipe for disaster. Everyday hardworking men and women are finding that their debts are going up tremendously because of rises in interest rates, which means that less people spend. So I'm surprised that income revenue was up as high as it was because on the surface, it sounds like things are going better in the U.S., but in all reality, it isn't. There's still a lot of problems here. A lot of people are not working. A lot of people don't make the type of money they need to live a decent type of lifestyle. And I do believe that it's going to come up and bite us. So, at this particular point, the major concern, as far as I can see, is rising interest rates with a multi-trillion-dollar debt. And we haven't quite seen the ramifications of what's going to happen with China with the tariffs that the U.S. has slapped on them. It's going to be a problem. There's no doubt. So many big U.S. corporations deal with China, and this is going to affect their bottom line. There's no doubt about that.
Speak with Harold about investing in hard assets like rare colored diamonds. His website, rarecoloreddiamonds.com. Good news, the booming U.S. economy, jump-started by the 2017 GOP tax cut, has created 878,000 new millionaires in just the last 12 months. What is the dream salary that Americans want? It is above $100,000 a year. Specifically, men say their dream salary is $445,000. Women say $279,000 per year. Many baby boomers are headed for an uncertain retirement. These generation members hold less wealth, are deeper in debt, and will face higher expenses than retirees a decade older than them, according to a new report by the Stanford Center for Longevity. Baby boomers have saved less, they are in more debt, and with health care and other issues going to cost them more. You really need around $1 million to carry you through a 30-year retirement, where the average savings for the baby boomers is around $200,000. So Harold, the math does not work there. More than likely, you're going to see baby boomers being in a position where they continue to have to work during their retirement. I know I have a friend in that situation, got into debt towards the end of his retirement to make ends meet. He's at a position in his life where he works part-time to get by. I think there are a lot of people, Harold, that are in that position. In fact, it was just reported here, the people that are taking the jobs at McDonald's, not the young kids anymore, it's senior citizens. So you can see there is a big change. It's unfortunate, Harold, but it is happening.
Oh, there's no doubt about it. We've had many, many reports over the years that show that retirees have not saved enough money in order to retire. In fact, some of the numbers are staggering, to realize that most people don't have any extra cash in case of an emergency. I think last week or the week before, we had a report that shows that over 50 or 60% of Americans don't have $500 for an emergency situation. So how in the world are they going to retire? $1 million saved over a 30-year retirement is basically $30,000 a year. It's in this day and age, that's not easy to live on $30,000 a year. I think last week we reported that a lot of Canadians and Americans are moving to different countries to retire. Ecuador and Panama and Costa Rica, Central and South America areas are big. Italy, believe it or not, and Greece, and those areas are big for retirement because people can live on a lesser amount of money and can still live a decent life. But it means packing up, moving away from the family, and moving to a foreign country. That's not something that most people are comfortable with, but a lot of people are actually considering or doing that at this particular point. To retire at 65 for most people is just a dream. Unfortunately, most people have not put away enough money to retire comfortably, and it's going to be an issue moving forward. And you're right that most of these jobs at McDonald's and other places like that are now held by people in their high 60s and lower 70s that still have to work in order to be able to get by.
And how much money do you need to retire? We have a story about that in our free weekly newsletter. You can get it from Harold at rarecoloreddiamonds.com. It shows different countries. In the United States, they say you need 10x of what you make. So if you're making $50,000, you need $500,000. And these are general guidelines, not personal recommendations. We hear all the time the United States is doing so well. Hear the new millionaire number, that it's impressive. But think about this, the welfare generation. 51.7% of children in 2017 lived in households getting government assistance. Among American residents under 18 years of age in 2017, according to the Census Bureau, 51.7% lived in households in which one or more persons received benefits from a means-tested government program. Harold, that is a shocking number to me. In a country that is so wealthy, you can see the disparity between wealth and poverty. Here is the government taking care of so many people. 51.7% of children. That is a stunning number to me.
It is a stunning number and very concerning. If the Democrats get back into office anytime in the near future, that 51% number that you just gave is going to rise substantially because the Democrats are into a socialist type of situation where the government will take care of all these millennials and everybody else that can't make money and that type of thing. So that's a major concern. 51% at this point. I believe that number will go up if the Democrats, get back into the White House type of thing. So that's a very, very concerning number. And we know that with the millennials, that 30 to 40% still live with their parents or get financial help from their parents. That's not a good scenario. it basically is terrible for the country because it means that this whole generation of people will not make it necessarily to the workforce, will not start their own businesses, will not make enough money to pay substantial taxes. Some will never get married, only because of the financial situation and the fact that they want the government more to take care of them, or somebody to take care of them. That's a horrible scenario moving forward for a progressive country that wants to grow. So again, it's quite concerning to know that the government is supporting over half of the people in this country. It's a recipe for disaster for sure, Randy.
On the stock market front, billionaire hedge fund manager Steve Cohen said a bear market is coming within 2 years, adding to a chorus of voices who say the U.S. economy could falter by 2020. We're definitely late in the cycle, and so at some point we're going to enter a bear market, and it's going to happen in the next year and a half, maybe two. Prices are going up. We all see it. After years of low prices, fed by near zero interest rates in a convalescing economy, Americans are waking up to costlier consumer living. Everyday household staples like diapers, toothpaste, shampoo, dishwasher liquid, not to mention soft drinks, cookies, chocolate, cat litter, and autos have all started getting more expensive, a trend expected to continue early next year. Announced by companies during the most recent earnings season, these price hikes have typically ranged from 2% to 10%. They also stand in stark contrast to the usual unending sales and promotions from major retailers like Walmart and Amazon. The high prices aim to pad revenues for companies like Apple. They are selling less, but they're still making the same amount of money because they're raising the sticker prices. To give you an idea, the new MacBook Air laptops and iPads up by 20 to 25%. But for a growing number of businesses, they also represent a response to mounting transportation costs. A strong U.S. dollar is similarly cutting into foreign earnings, while a tight labor market pushing up wages, which obviously affects profits. Not good for business in the United States.
No, you're 100% right. We have every reason, to be tremendously concerned. Inflation, just go back into history and see what inflation has done to markets in the past. Go back to 1979-80, when gold hit $850, primarily because of inflation and higher interest rates. And interest rates went all the way to 22%. Could you imagine a time where interest rates are 20%? I mean, it would destroy the country. Nobody could get a mortgage. Nobody could borrow money. Business would stop. It's a horrible situation. And that's why it was an unpopular decision to raise interest rates. And Donald Trump, or President Trump, is not happy with that. But he has to understand that if you don't do something, these are action and reaction markets. If you just sit there and let the markets do what they're doing with any recourse whatsoever, you're going to find that the markets are going to plummet. So at this point, if inflation is one of the biggest fears, and it should be, the only way that you can combat inflation at this time is to raise interest rates. That's why the U.S. dollar is trading above 97 at this point and should go substantially higher. Now, oil prices are going to come down. That could help substantially, with oil, with inflation. But food prices and everyday products, two things are happening. Either they're raising prices of everyday items that we use, daily, or they're giving us less for the same amount of money. Either way, it's going to have the same result. Inflation is here, and it's going to get stronger. And again, it is going to affect the market. So you've definitely got higher interest rates is a big problem when you owe $22 trillion. And most of the people in the country have debt because interest rates have been so low for so long that people have borrowed cheap money. Now the cost of borrowing cheap money is going up, and now we're going to have to pay for that.
We've seen a lot of it. It's called shrinkflation, where they're selling you a product for the same price, but it is smaller. You see it every day when you do your shopping. Before we get to diamonds, a couple of interesting notes. This week, a painting by British artist David Hockney is set to displace Jeff Koons' Balloon Dog is the most expensive work by a living artist to be sold at auction. Portrait of an Artist pool with two figures, and we have a picture of it in our free weekly newsletter, will be sold tonight. Christie's post-war and contemporary art sale, Thursday, November 15th. The estimate on it, $80 million, overtaking Koons' 213 record of $58.4 million. And I have to say, seeing the picture, it's good. A lot of art, a lot of art you see and you go, okay, this one actually is quite nice. We will let you know what it sells for. There was a sale at Sotheby's and Christie's for watches. Sotheby's sells one Patek Philippe for $3.9 million, Christie's for $3.2 million. Harold, watches, handbags, art, cars, you see it all the time. They're going for record prices.
Unbelievable. I mean, Patek Philippe is the biggest name in watches. Own one of them myself. Certainly not in the 3 million range, but one of my favorite watches. But that's just unbelievable that when you buy quality, and we're going to see a lot of it now because a lot of these auctions are happening now, and $58 million paintings and $3 million watches and $50 million diamonds. It's just an unbelievable time to be a collector. And some of these items, as we're going to talk about now, are just off the charts amazing, and the prices that they realized, were proper for what was sold, especially in the case of some of the diamonds that we're going to talk about.
Connect with Harold at rarecoloreddiamonds.com. Ask him about Argyle pink diamonds. We'll talk about the tender here momentarily, but the big news of the weekend, it was everywhere. Incomparable $50 million pink diamond smashes record at Geneva auction. An exceptionally rare pink diamond of nearly 19 carats fetched 50.3 million Swiss francs, setting a new per-carat record for a stone of its kind. The Pink Legacy was snapped up by American luxury brand Harry Winston, part of the Swiss Swatch Group, for 2.6 million per carat. That is a world record per carat for a pink diamond, according to Francois Curial, head of Christie's in Europe, and that includes all fees and commissions. This stone is, for me, the Leonardo da Vinci of diamonds. To give you an idea of how rare this is, that only 4 diamonds weighing more than 10 carats of the same color have been sold in the 251-year history of Christie's. That is a huge statement, but Harold, 30 to 50 million, that was the estimate. It went for a little bit more than 50 million. If you own pink diamonds, you have to be excited.
That's really an amazing price for an almost 20 carat diamond. Now, putting things into perspective, that we've seen blue diamonds, vivid blue diamonds of similar quality, large diamond, vivid in color, which is the highest saturation of color, with some provenance. And those blue diamonds have sold closer to 5 million a carat. So 2.5 million for a vivid pink of that quality is an excellent price, and it is the highest price that we've seen thus far. But I'm going to say over the next 5 or 6 years that we will see that price broken substantially. In fact, vivid pinks of that type of quality will actually reach close to what blues are trading for today. Now, how much higher can blues go? Well, there's an auction coming up for blues, and we're soon going to find out. But it's just amazing that an investor will pay $50 million for a diamond. And the reason that he's doing that is not just because it's a beautiful diamond. Harry Winston is going to resell that diamond, and they're going to make a big profit from it. To lay out 50 some odd million dollars for a diamond just goes to show you that people of wealth will buy quality items like that, like a Patek Philippe watch, like a $58 million painting, like a $12 million Ferrari type of things, because they're great investments. They go up in value. They don't lose their value, along with the fact that, just pride of ownership. I mean, to own one of the most famous diamonds in the world, and he's renaming the diamond, is just such an unbelievable situation. So, again, just very pleased to know that they thought that the diamond would sell for between 30 to 50 million, and it actually sold for over 50 million. that's just a great sign of what's happening in the rare color diamond market.
And Harold is right. Today, they are having an auction, Sotheby's, in Geneva, and it will feature blue diamonds. So we will get an idea very quickly of how well blues are doing. But a $50 million pink diamond, when the estimate was 30 to 50 to go for the upper end, that's very exciting. Even better news. If you own an Argyle pink diamond, Rio Tinto's Argyle pink diamonds tender delivers record results for pink, red, and violet diamonds. 63 from its Argyle mine in Australia, reflecting the strong global demand for fancy colored diamonds. These results are also a reflection of Argyle approaching the end of its mine life, with the supply of these extremely rare diamonds becoming even scarcer over the past 18 years. The value of Argyle pink diamonds sold at tender have appreciated over 400%, outperforming all major equity markets. We do know the mine is shutting down in 2020. They have said they believe they will have maybe 2 to 3 more Argyle pink tenders, and then that is it. Those that have pink diamonds, congratulations.
You bet, Randy. It really was and is an amazing time to be in the rare color diamond market. And with the Argyle mine getting ready to close in 2020, there goes 95% of the pink diamonds in the world. If you own an Argyle pink, I believe we're going to do very, very well. Now, again, Argyles are smaller diamonds. Very seldom will you see a 1 or 2 carat pink diamond from the Argyle mine. Those are extremely rare. In actual fact, when Argyle holds their tender, which Randy just spoke about a few minutes ago, there's maybe 50 or 60 diamonds in the entire tender, and that's it. So to own a pink diamond from the Argyle mine is extremely rare. Give it 4 or 5 years after the mine closes, when there's no pink diamonds available for sale, and then my clients are going to see, what I think, the very smart move that we made investing in Argyle pinks, because again, they will be gone, obsolete, no more available, and when they do hit the market, I think they're going to be phenomenal. 95% of all Argyle pinks are under a 1/4 carat, so you're talking smaller diamonds, but these are known as the most concentrated form of wealth on earth. They do nothing but go up in value, and again, we're very excited to be able to test the market on our Argyle pinks down the road with our auction sites. It's going to be a great time.
Speak with Harold about pink diamonds. RareColoredDiamonds.com, RareColoredDiamonds.com to invest in Argyle pink diamonds. Pearl and diamond pendant that belong to the ill-fated French Queen Marie Antoinette sold for $36 million at auction with Sotheby's, and that is a world record for a pearl. An 8-carat Bulgari blue diamond is going to lead Christie's New York with a pre-sale estimate of $13 to $18 million. The cushion-cut 8-carat fancy vivid blue piece will go under the hammer at the Magnificent Jewel Sale December 5th. The stone is one of a number of colored diamonds on offer, including a heart-shaped 15.56-carat fancy intense pink diamond pendant necklace estimated at $9.5 to $12 million. This week, Graf unveiled some diamonds that came out of the 1100-carat Lasiti Lorona, and they are just beautiful, the diamonds that they have cut out of this stone. You can see them in our free weekly newsletter. But Harold, the provenance on a pearl from Marie Antoinette, that would be something that you could hold for many years, possibly wear it with heavy security. But it's great to see another world record, this time for a pearl necklace that belonged to Marie Antoinette.
You better believe it. Just absolutely amazing to see, what these pieces are going for. We're really excited to see Marilyn Monroe's, yellow diamond coming up for sale soon, what these blue diamonds are going to fetch today. Just a very exciting time to be in hard assets, like rare colored diamonds that seem to be just doing phenomenal at auction. And I don't see any end in sight with them because they're so rare. Very, very seldom, do colored diamonds come up for sale. Only 1 out of every 100,000 diamonds that are mined is a colored diamond, and that doesn't necessarily mean that diamond is an investment quality diamond. So we're very excited to see these prices, especially with what happened with the pink diamonds this week, with what happened with the Argyle tender, and what's going to happen with the blue diamonds today. I just think it's a great time to be in the rare colored diamond business.
And on the white side of things, a 14-karat diamond prompted a bidding war at Fellows, and that was in the UK last week. The emerald cut 13.86 karat H color VS2 clarity stone fetched, and this is in pounds now, $310,500 against a pre-sale estimate of $100,000 to $150,000. Harold mentioned Marilyn Monroe. We can't forget about Frank Sinatra and his wife Barbara. Sotheby's New York in December is going to be auctioning off a 20.60 karat diamond ring that Frank Sinatra gifted his wife on their engagement in 1976. Harold, for hard assets, now is such an exciting time when we start to see these results in the fall. We go all summer, don't really hear much. We get into the fall, and then the news starts to hit. I can't wait to find out what happens with the blue diamonds today at auction with Sotheby's. I bet they go for record prices.
Well, it certainly appears, that's the way that it's heading. If that white diamond that you just described sold for that price, realizing that it's not flawless, it's not a D flawless, it's an H color, which is still a good color, but D is the strongest color in white. So the prices that are coming out are just excellent. I'm just very, very pleased to see it, because this is something that we brought to our clients back about 15 years ago. And now we're starting to see that as a long-term investment, something that you keep within your family, these type of assets could add tremendous wealth to your family portfolio. And it's, obvious by what the results are. Now, again, most people don't or couldn't own a $50 million diamond. But what we have found over the years, that it's the lesser price, rare diamonds that percentage-wise has done the best. Diamonds in the 100 to 300,000 range have just done tremendously well at auctions. So we're looking forward to that. We own our own auction businesses. We have our own blockchain. We will be starting to do auctions in December, which everybody will be invited to watch. So we're very excited about it. We feel now, with all the uncertainty in the financial markets, with Donald Trump as president, anything is possible. Good things are possible, bad things are possible. The fact that the country is in $22 trillion debt with higher interest rates coming, problems with China, all that type of thing, could really sink the stock market. We've seen it happen many, many times before, and it could definitely happen again. So, if you are in paper assets, be very, very careful. These markets overnight can do things that you could wake up in the morning and find out that you're broke type of thing. We've seen that happen before. Diversify your positions and get something into the hard asset market. We feel that's a strong investment for the longer term, especially in rare colored diamonds.
We always like to end on a fun note. Alibaba over in China is the equivalent to Amazon. They came up with a day, very wise of them. It's called Singles Day. And single people go out and buy themselves presents. They brought in Sunday $30.7 billion on Singles Day.
Sure, there'll be some copycats, but absolutely brilliant marketing.
Any final thoughts here?
Again, just be very, very careful. When oil drops $21 in a day, almost 30% of the price, that's a very scary situation, especially when OPEC is cutting production and Iran's oil's off the market. That is a very concerning move, because that never, ever should have happened. So there was obviously either a huge short in the market or whatever that could have offset, the bullish news that came out of the oil market. The dollar is getting stronger, means the gold is going to drop. It means also that the stock market, with all these roadblocks and everything that are out there, you just got to be very, very careful right now. Speculation is not the answer to what's going on. Right now, you're better off being conservative than jumping into a market to try to make money, when that market is in a bearish stance or whatever. So volatility can work for you and against you, at this point here, I would look to be more conservative.
As we stated on the last show, 89% of U.S. denominated assets have not made any money this year. That's how difficult the market is. Very, very difficult. Thank you, Harold, for another great podcast and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Ask to get on the list for our free weekly newsletter. It's the companion to the podcast. We send it out via email every week. Get those stories on the $50 million pink legacy diamond. Also, Rio Tinto's Argyle pink diamond tender delivers record results. We have the Marie Antoinette pearl selling for a record price of $36 million. Also, the Patek Philippe watches selling for $3.9 and $3.2 million. It was a great week for hard assets. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.